China announces 60 billion yuan to invest more in the stock markets. Egypt and Greece sign a joint declaration of strategic partnership. And the Russian Finance Ministry reports that oil and gas sales fall by around 12% in April. Welcome to our economic bulletin. We start off with the U.S. Federal Reserve is paused to announce today the results of the two-day policy meeting. Since their last meeting, economic data has presented a more complicated outlook, with unsettled trade policies contributing to the uncertainty. Officials could point to a slowdown in first quarter GDP, along with declining business and consumer confidence, as reasons to consider rate cuts. Alternatively, strong employment data, healthy consumer spending, and an anticipated tariff-driven rise in inflation may encourage them to hold off on any changes. Moving on to North America, where Canadian Prime Minister Mark Carney has said that no decisions were made on tariffs. During his meeting in Washington on Tuesday with U.S. President Donald Trump, he confirmed the two leaders agreed to continue talks, especially focusing on North American auto industry and the alignment of incentives between Canada and the United States. Carney also reiterated that Canada is not for sale, responding to Trump's previous comments about Canada potentially becoming the 51st state.
Today as leaders of two sovereign independent nations. And I want to thank the President.
Statistics Canada has revealed that the country's trade deficit narrowed to 506 million Canadian dollars. March, imports of goods dropped 1.5% in March, driven by a 2.9% slump in shipments from the United States. Exports to the United States dropped by 6.6%, but were almost compensated by an increase in exports to the rest of the world. Canada's overall exports for March came in at least 69.9 billion Canadian dollars, down from 70.04 billion Canadian dollars in February. However, imports fell in both value and volume terms. Moving on to Europe, where United Kingdom Prime Minister Keir Starmer has defended a newly signed UK-India trade agreement, rejecting claims that it undermines British workers by offering tax exemptions to some Indian workers. The exemption, part of the Double Contribution Convention (DCC), is reciprocal and also benefits British workers in India. Though largely downplayed in the United Kingdom, India hailed the clause as a major victory. The government estimates the DCC will cost around $100 million annually, but maintains the deal overall would support British jobs and trade growth. The Russian Finance Ministry has announced running a budget deficit of 3.5 trillion rubles, or 1.5% of gross domestic product in the first 4 months of the year. Russia's finance ministry also raised the 2025 budget deficit estimate to 1.7% of GDP, or 0.5%, after reducing the energy revenues forecast by 24%. The ministry said the advance payments to finance the budget expenditure in January were behind the increase, as well as the decrease in oil and gas revenue inflows. The ministry added that it will not affect the execution of the target parameters of the structural balance for the year 2025 overall. China's central bank has announced a raft of stimulus measures, including interest rate cuts and major liquidity injection, as the country steps up efforts to soften the economic damage caused by the trade war with the United States. They also said that the government would increase the amount of money available for the factory upgrades and other innovation and elder care and other service businesses. The announcements came shortly after United States and Chinese officials said that the two countries will meet this weekend for talks. China is expanding a pilot scheme that allows insurance companies to invest more in the stock markets. China's National Financial Regulatory Administration, led by Li Yuan's, announced approval for an additional 60 billion yuan from long-term insurance funds to invest in stocks. Li also highlighted efforts to stabilize the property market amid pressure from the United States tariff policies. Global rating agency Moody's has warned that any sustained escalation in tensions could severely undermine Pakistan's already fragile economic stability. Moody's cautioned that further flare-ups could impair access to external financing and put additional pressure on Pakistan's foreign exchange reserves, which, as just over $50 billion, remain far below what is required to meet external debt obligations in the coming years. Moody's, however, noted that in contrast, India's reserves are robust, exceeding $688 billion. It further highlighted that the macroeconomic conditions in India remain stable due to the strong public investment and resilient private consumption, despite the possibility of higher defense spending slowing its fiscal consolidation.
The India-Pakistan conflict, with Kashmir at its core, imposes asymmetric but severe economic costs. Pakistan's fragile economy is especially vulnerable to trade disruptions, currency shocks, and investment losses, while India faces slower growth and fiscal strain from sustained military spending. Kashmir's strategic water resources and agricultural output amplify the stakes, with conflict directly undermining regional food security and livelihoods. The latest escalation following the April attack in Pahalgam has triggered a wave of economic fallout. Pakistan's Karachi Stock Exchange plunged 2,000 points. The rupee faces further devaluation, and with only 2 months of foreign reserves and $22 billion in debt repayment due, the country teeters on the brink of default. The IMF has cut Pakistan's growth forecast to just 2.6% for 2025. For India, the impact is less immediate, but still significant. Moreover, S&P Global has lowered India's growth outlook to 6.3% for 2025-2026, as investor confidence wavers and capital outflows rise. A sustained escalation in tension with India could hurt Pakistan's growth, Moody's says, and hamper the government's outgoing fiscal consolidation, setting back Islamabad's progress in achieving macroeconomic stability. Bilateral trade, already modest at $1.2 billion, has halted with the closure of the Wagah-Hatari border, and Pakistan's exports to India have collapsed from $547 million in 2019 to less than $500,000 today. While import costs have surged by up to 30%, the conflict's most critical flashpoint is water. On April 23rd, India suspended the Indus Waters Treaty, a move that threatens 90% of Pakistan's irrigated agriculture and risks $10 to $20 billion in crop losses, deepening food insecurity and rural hardship.
And for further analysis, we're joined from New Delhi by Assistant Professor of Economics in National Law University, India, Dr. Vinay Kumar, to discuss the latest developments, the economic impact of the Indian-Pakistani conflict and Kashmir's role. Welcome to Qnews, sir, Economic Bulletin, and it's a pleasure to have you with us. Sir, how has the long-standing Indian-Pakistan conflict, especially over Kashmir, shaped the economic trajectories of both countries since 1947?
See, if you take the case of the economic situation, economic cooperation between India and Pakistan, since the independence, both the countries were, in fact, dependent upon each other. But because of the conflicts and because of the wars in 1965, 1971, and in fact in 1999 of Kargil War. So after the Kargil War, there were because the Pakistan used to infiltrate the state-sponsored terrorists into the territories of India to create the violence. So, if you take the case of the various terror activities that happened in India, either it may be in 26/11 of 2008, Uri or Pulwama, every time whenever there is a terrorist attack, or the economic cooperation between the two states is in fact on a backslide. uh, because of these issues, because of the infiltration and because of the terror activities, in fact, the whole of the region, the South Asian region, was facing a problem because, in fact, India and the Pakistan were not being the largest, the
Nuclear
economies,
powers?
being the largest economic players in South Asian region. In case if they would have cooperated, that would result in a very good economic cooperation between these two states. But unfortunately, because of the terror activities of the Pakistan, as you know that we cannot cooperate with the state which has been promoting terror activities in India. So considering all these factors, the economic relationship between the India and Pakistan are quite not quite impressive.
Okay, sir, given Pakistan's fragile economic condition, how do trade disruptions and currency volatility link to the conflict worsening its fiscal challenges, sir?
See, in fact, the Pakistan, has been drifting towards the economic crisis because of the price volatility, and in fact, it has reached out to the IMF also for funds, and because if you look at the economic situation of the Pakistan, after COVID, if you look at the situation, in fact, the economic situation of Pakistan drastically, affected because of the COVID and its aftermath. Basically, the growth trajectory that we can see in the last decade, it is almost just a minor increase in its GDP, around 2%, something like that. So, considering the economic situation and political instability and the lack of investments that can be propelled through the international cooperation. In fact, one of the all-time friend of the Pakistan, that is China, is in fact vexed up to invest in Pakistan because of the terror activities that takes place in the Pakistan. So all these factors have contributed to the economic crisis in Pakistan. As we know that there is no political stability that prevails in the state of Pakistan. There
Yes,
are
sir.
three
This
times.
brings me to another question, which is the suspension of the Indus Waters Treaty in April 2025, which marks a critical turning point. What are the immediate and long-term economic consequences of this move for both countries, sir, and the impact, especially Pakistan's agriculture sector, sir?
Yeah, basically, if you look at the Indus Water Treaty, there are there are six tributaries of the Indus water, which are there are six rivers that flows through the between the boundaries of India and Pakistan. That is the
Between
western rivers.
Pakistan and India, sir, right?
Yeah, Pakistan and India. So it is the western river that is Indus, Chenab, and Jhelum. These rivers flows into the territories of Pakistan, and there are Satluj, Ravi, and Bias. These rivers flow into the territories of India. So, whereas the Indus Water Treaty is concerned, uh, since its signing, never this kind of action was taken by India before, though India and Pakistan went to wars in 1971 and in 1999. But never India has resorted to the abeyance of this Indus Water Treaty. But as rightly pointed out by the Prime Minister of India, that the water and blood cannot flow together. So India, uh, India, in fact, stated earlier also to make sure that any kind of terrorist activity should not be sponsored by the Pakistan in the
Sir,
Indian
but this
territories.
harms India and harms Pakistan. I know it harms Pakistan more, but
Just
what about India?
coming to your question that how it would affect. Right now, there might not be a immediate effect in Pakistan, but when it comes to the cropping season in the Pakistan, especially in the month of
Which
June, July,
June and
it
July? Okay, sir.
yeah, it may affect the agriculture sector in Pakistan. So that might be it might be having the problem of agricultural growth. In fact, is if you see at the economy of the Pakistan, it has been struggling hard to meet its needs. If it goes like this, then it is go if the river water flow has been stopped, if it is stopped by India, then it will create a lot of problem to the Pakistani economy also. And it is rightly stated that we cannot, stated by the Prime Minister of India, that we cannot allow the water and the blood to flow together. So
Okay,
this is
sir, I want to ask you another question here. How does Kashmir's, maybe it's going to be resolved by them, but how does Kashmir's strategic importance, sir, as a source and agriculture, as a water source and agriculture hub, influence the broader geopolitical and economic stakes of the conflict?
Can you please repeat your question,
Oh,
please?
of
Can you
course, sir, I
please?
can. Sir, how does Kashmir's strategic importance as a water source and agriculture hub influence the broader geopolitical and economic stakes of the conflict?
Yeah, if you look at the Jammu and Kashmir, it is a integral part of India, and in fact, recently, it has strategic significance. In fact, in 1948, when there was a war between in India and Pakistan, the Pakistan infiltrated into the territories of India and occupied the territories of Jammu and Kashmir. And this Pakistani occupied Kashmir is in the hands of Pakistan for a long period of time. And coming to the strategic location of this Jammu and Kashmir, it
Okay,
can
sir,
connect.
looking what economic reforms or policy measures could Pakistan implement independently or collaborate, sir, to reduce the economic costs of conflicts and foster regional stability at this point, sir, in light, of course, of everything that's taking place and, of course, of the certain and current situation that's taking place between India and Pakistan, which was unprecedented, sir.
Uh, you know, uh, as you know that it is a bit difficult at this point of time to have a cooperation with Pakistan. Either it may be an economic cooperation or any other kind of cooperation it may be. But if in case if Pakistan assures that it eliminates all the terror launch pads or terror hideouts from the Pakistan, which in fact is not is in fact have in fact it's difficult for Pakistan to do that. But in case if Pakistan promises to do that and cooperates with India, then there might be a possibility of the exchange of goods and other services between both the countries.
Hopefully, sir, this takes place and and both countries reach a settlement as soon as possible. From New Delhi, that was Assistant Professor of Economics at National Law University, India, Dr. Vani Kumar. Thank you very much for your insights and valuable knowledge. And now we move on to South America, where ratings agency Moody's forecasts that inflation in Argentina will reach 30% by the end of this year, although a senior analyst indicated that this figure may be revised downward. A senior analyst at Moody's noted progress under President Javier Milei's government in controlling prices, though inflation has stagnated recently. He also praised the government's prudent actions, including lifting foreign exchange restrictions. The projected inflation marks a drop from 55.9% recorded through March. Moody's may also consider a gradual upgrade of Argentina's sovereign credit rating and projects 4% economic growth in 2025, slightly below market expectations. President Abdel Fattah el-Sisi has announced that Egypt signed with Greece a joint declaration of strategic partnership. President el-Sisi and Prime Minister highlighted that the electricity interconnection project between Egypt and Greece will serve both countries. The Greek Prime Minister also added that attached great importance to the security and freedom of navigation in the Red Sea. He also stated that the Suez Canal has been severely affected by the situation in the Middle East. OPEC Plus countries have reaffirmed their commitment to market stability on current healthy oil market fundamentals and adjust production upward. The 8 OPEC Plus countries noted that this measure will provide an opportunity for the participating countries to accelerate their compensation. They reiterated their collective commitment to achieve full conformity with the Declaration of Cooperation, including the additional voluntary production adjustments. They also confirmed their intention to fully compensate for any overproduced volumes since January 2024. Slovakia's Prime Minister Robert Fico has rejected European Commission plans to phase out Russian gas and other energy imports. He highlighted that the measures were unacceptable to the Slovak government and would impact EU energy prices. He stated that his government was ready to veto it, and all Slovak representatives involved in the negotiations on the EU level would work to stop it. Fico added that he respected attempts to reduce energy dependence on third countries, but the Commission's proposals would harm the EU, raising prices in the bloc and damaging its competitiveness. The Russian Finance Ministry has reported that budget proceeds from oil and gas sales fell by around 12% in April compared to the same month last year. According to the Finance Ministry, revenue reached 1.09 trillion rubles last month. 1.23 trillion rubles in April 2024, but marginally up from 1.08 trillion rubles in March. Revenue declined by 10.3% year-on-year in January-April to 3.73 trillion rubles. Moving on to the oil prices, which steadied though after bouncing back from a sharp sell-off earlier in the week as investors turned their focus to US-China trade talks this week. Brent crude futures were down around 0.18% at $62.04 a barrel, while US West Texas Intermediate crude was also 0.19% lower at $58.98 a barrel. Moving on to the gold prices, which fell more than 1%, pressured by a firmer dollar and US-China trade talks optimism. While the focus is on Federal Reserve policy decision due to later in the day, gold slipped 1% to $3,395.219 dollars an ounce. US gold futures lost about 0.6% to $3,403.5. Global markets showed a mixed performance during Wednesday's trading as investors awaited the Federal Reserve's policy decision. In the United States, S&P 500 futures inched up 0.04%. Futures tied to the Dow Jones Industrial Average were up 0.40%, while Nasdaq 100 futures declined 0.22%. Moving on to Europe, where the United Kingdom's FTSE 100 was down 0.56%, and Germany's DAX decreased 0.49%. France CAC 40 dropped 0.97%. Moving on to Asia, where Shanghai Composite Index added 0.80%. Hang Seng in Hong Kong was up 0.13%. Japan's Nikkei 225 declined 0.14%. That brings us to the end of our economic bulletin. Here's what we have been covering. China's announced 60 billion yuan to invest more in the stock markets. Egypt and This concludes our economic bulletin. Don't forget to follow Qnews on YouTube, Facebook, X, Instagram, and TikTok at Qnews EG to stay informed. Thank you very much for watching and stay tuned for more updates on Qnews.